Do you have extra money and looking for where and how to invest them? You are in luck. In today's video, we'll be discussing 5 best investments to take into consideration when and if you plan on investing. Welcome to Daily Update, your home of finance and wealth creation. If you are new on here, don't forget to subscribe to this channel. One of the best ways to secure your financial future is to invest, and one of the best ways is to invest over the long term. Investing helps you grow your wealth, allowing your financial goals to be met and increasing your purchasing power over time. While investing can build wealth, you will also want to balance potential gains with the risk involved. As the start of 2020 showed with the coronavirus crisis, markets can become volatile very quickly. While many people think of investing as trying to make a short-term score in the stock market, it is the long-term investing where regular investors can really build wealth. By thinking and investing long-term, you can meet your financial goals and increase your financial security. Let's look at some things to consider when investing. Can you withstand a high level of risk to get a high return? It's key to know your risk tolerance, whether you will panic when your investments fall. At all costs, you want to avoid selling an investment when it's down, if it still has the potential to rise. It can be demoralizing to sell an investment, only to watch it continue to rise even higher. Those with strong stomachs and workers still accumulate a retirement nest egg are likely to fare better with riskier portfolios, as long as they diversify. Longer time horizon allows you to ride out the volatility and take advantage of the potential higher return of stocks. So investors who put money into the market should be able to keep it there for at least 3 to 5 years. The longer the better. If you are looking to grow your wealth, you can opt for lower risk investments that pay a modest return, or you can take on more risk and aim for a high return. Without further ado, let's look at 5 best investments for beginners in 2020. Stock funds. If you are not quite up for spending the time and effort analyzing individual stocks, when a stock fund, either an ETF or a mutual fund, can be a great option. If you buy a broadly diversified fund such as an S&P 500 index fund or a Nasdaq 100 index fund, you are going to get many higher growth stocks as well as many others. But you have a diversified and safer set of companies than if you own just a few individual stocks. If you buy a fund that's not broadly diversified, for example, a fund based on one industry, be aware that your fund will be less diversified than one based on a broad index such as the S&P 500. So if you purchase a fund based on the automotive industry, it may have a lot of exposure to oil prices. If oil price rise, then it's likely that many of the stocks in the fund could take a hit. That said, a stock fund is going to be less work to own and follow than individual stocks, because you own more companies and not all of them are going to excel in any given year. The returns should be more stable. With a stock fund, you will always have plenty of potential upside. Rental housing. To pursue this route, you have to select the right property, finance it or buy it outright, maintain it and deal with tenants. You can do very well if you make smart purchases. Real estate can be an attractive investment, in part because you can borrow the bank's money for most of the investment and then pay it back over time. That's especially popular as interest rates sit near attractive lows. Those who want to be their own boss, owning a property gives them that opportunity, and there are numerous tax laws that benefit owners of property especially. As with any assets, you can overpay for housing, as investors in the mid-2000s quickly found out. Also, the lack of liquidity might be a problem if you ever needed to access cash quickly. Housing is among the least liquid investments around, so if you need cash in a hurry, investing in real estate properties may not be for you. On top of this, a broker may take as much as 6% cut of the top of the sale price as a commission. While the risk can be high, the rewards can be quite high as well. If you have selected a good property and manage it well, you can earn many times your investment if you are willing to hold the asset over time. Certificate of deposit. CDs are similar to savings accounts, but they do offer a better return, and the money is not accessible until the set amount of time has passed. Unless you don't mind a penalty, this federal issued time deposit have specific maturity dates that can range from several weeks to several years. Because they are time deposits, you cannot withdraw the money for a specific period of time without penalty. With a CD, the financial institution pays you interest at regular intervals. Once it's matured, you will get your original principal back plus any accrued interest. You may be able to earn up to around 1.8% APY on this type of investment. CDs are considered safe investments. However, they do carry reinvestment risk. The risk that When interest rate falls, investors will earn less when they reinvest principal and interest in new CDs with lower rates. The opposite risk is that rates will rise and investors won't be able to take advantage because they have already locked their money into a CD. Dividend stocks. A dividend stock is a simple one that pays dividend, a regular cash payout. Many stocks offers dividend, but they are more typically found among older, more mature companies that have a lesser need for their cash. Dividend stocks are popular among older investors because they produce a regular income, and the best stocks grow that dividend over time. So you can earn more money than you would with the fixed payout of a bond. While dividend stocks tend to be less volatile than growth stocks, don't assume they won't rise and fall significantly, especially if the stock market enters a rough period. However, a dividend paying company is usually more mature and established than a growth company, and so is generally considered safe. That said, if a dividend paying company doesn't earn enough to pay its dividend, it will cut the payout, and its stock may plummet as a result. You can buy and sell your fund on any day the market is open, and quarterly payouts, especially if the dividends are paid in cash, are liquid. Still, in order to see the highest performance on your dividend stock investment, a long-term investment is key. You should look to reinvest your dividend for the best possible returns. Municipal bond funds. Municipal bond fund investment is a number of different municipal bonds, or munis, issued by state and local governments. According to the Financial Industry Regulatory Authority, muni bonds may be bought individually through a mutual fund or an exchange traded fund or ETF. You can consult with a financial advisor to find the right investment type for you, but you may want to stick with those in your state or locality for additional tax advantages. Municipal bond funds are great for beginning investors because they provide diversified exposure without the investor having to analyze individual bonds. They are also good for investors looking for cash flow. Individual bonds carry default risk, meaning the issuer becomes unable to make further income or principal payments. Cities and states don't go bankrupt often, but it can happen. Bonds may also be callable, meaning the issuer returns principal and retires the bond before the bond's maturity date. This results in a loss of future interest payment to the investor. Choosing a bond fund allows you to spread out potential default and prepayment risk by owning a large number of bonds, thus cushioning the blow of negative surprises from a small part of the portfolio. Investing can be a great way to build your wealth over time, and investors have a range of investment options, from safe, lower return assets to riskier, higher return ones. So that range means you will need to understand the pros and cons of each investment options to make an informed decision. While it seems daunting at first, many investors manage their own assets. With that said, let us know what investment path you will take in planning for your future. Please don't forget to subscribe to our channel to keep bringing you guys to date investment plans and wealth creation. Thank you guys for watching and see you in our next video.